Welcome back, YouTube. In this tutorial, I'll be covering the 15-minute time frame and how this chart can be useful in helping you trade the lower time frame, the 5-minute time frame, and it'll be featured side by side next to the 5-minute time frame as well during the live chart sessions. So let's dive right into it, and I'll go ahead and explain to you exactly what these various indicators do and mean to better help you in your trading. So let's begin with the channel here on top. This channel here, composed by the green line, the dashed white line, and the red line here, is a channel that tracks both trends and cycles in the market. And as you've heard me say before, there are only two types of cycles in the market: long cycles and short cycles. Okay? So the way this works is whenever price is below the lower red line, the market is in a trend. Whenever the price is between the red line and the green line, the market is in cycle mode. All right? So the white, the solid white line that traces it, that's a specialized moving average. It's unlike anything that you guys can find out there in the marketplace right now. It's a specialized moving average. And generally, in the simplest way possible that I could explain it to you, whenever price is below it, the market is bearish. Whenever price is above it, the market is bullish. All right? So in this case here, we have a very good example of the market over on June 28th. Selling off right here. This was not the entry. The entry would have been right here, first bar below the red line, right? Now you get confirmation of this trade with this smoother that I have here. This red line right here will perfectly track the beginning and ending of the trend right there. All right, beginning of the trend, ending of the trend at the crossing right there. Now, if you want to be precise about your exits, you could follow this indicator, which is the solid white line right here, which is really a coefficient tracker of the price sensitivity that you're seeing on the screen right now. And generally, when this diverges from the red smoother, that is generally the end, the bottom, whatever you want to call it in the trade. And I want to give you another example of how that works in a cyclic environment when price is within the bands here. Okay, so in this example right here, they were both coming down, and as soon as there was divergence right there, you see that? That was the end, and that basically nailed the bottom right there for you. Very simple to use. This is another version of a smoother that I've got here as well. And this is to confirm that this is actually going in the right direction as well. You can use this here as well. That's going down right there, and boom, trade ends right there. The end. There's nothing else to do right there. This histogram right here at the bottom is also a highly specialized indicator to track directional movement in the market right here as well. Market's going down, boom, 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 boom. As soon as it goes above the zero line and turns green, that's it. Now, if you notice right here, it turned green right about this area right here. So as I told you, as soon as this diverges right there, that's the end. This is really powerful to spot your tops and bottoms right there. This other indicator right here is bound by a root mean square here as far as your boundaries are concerned, and it's really good at spotting tops and bottoms as well. Whenever it gets above the upper threshold right there, you can pretty much guarantee yourself that the trade is getting exhausted. It comes down, 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 and as soon as it bottoms out, boom. Again, very close to the divergence right here, where you could have gotten out there too. So moving back just a little bit here to give you an example of what this looks like in a more cyclic type environment. Oh, look, here's a good one right here. This is exactly what I was telling you, you guys right here. Look, we've got a trend ends, goes into a cycle, boom, hits the upper threshold, comes down. There was a little bit of a trend right here, and then it cycles again. You see that? Little bit of a trend right there, then it goes right back up in cycle mode. So in situations when you're in cycle mode, guys, it's really simple. It's going to hit the top of the band, and you have a very high probability that it's going to revert to the mean or to the bottom channel, bottom of the channel right there. So in this case here, if you want to get out right here at the top, it's really simple. You follow this right here, and boom. The moment it intersects right there, you see that intersect right there? That is it. That is the end of the trade, which is really the top of the channel right there, if you could see that right there. You see that? That is the top of the channel. That is the end right there. Absolute end right there. Now, if you want to come back and take it on the reversal and come all the way down with it, boom. That intersect right there is the end as well. You see that? Of that short-term cycle. Okay. Now, if you want to stay in the cycle a little bit longer, then you may want to follow the red line till its entirety right there. Okay. Moment it intersects, that is the end of the cycle right there. You can also get out right here, which is very near the bottom as well. Okay. Or as soon as this filter down here kinks and turns green, that's also the end of the trade as well. So there's a couple of very neat tools here, guys, that you can use for your advantage when trading the 5-minute chart. You can use this as confirmation, directional confirmation of which way the market is moving at any given time. All right, and then use it to time your entries on the 5-minute chart. So hope this short tutorial helped you in making heads or tails of what to do when you're looking at the 15-minute in relation to trading the 5-minute time frame.